There's a lot of people like me who are paying for insurance through their superannuation and don't know about it. Hello?
Oh, hi, darling, it's me. Well, you from the future. It's 2070 and I've just retired. Right now, I'm on a cruise ship to Mars. Anyway, I just wanted to check in and remind you to see how much you're paying for life insurance.
What life insurance?
All right, bye-bye now. Enjoy your future. Well, my past.
Okay, firstly, when did my fashion sense get so bad? And secondly, I'm not paying for life insurance. Am I? Actually, it turns out I've been paying nearly $300 each year for various kinds of insurance. I just didn't know about it because instead of coming out of my bank account, it's been coming out of my super account. Now, there's a lot of people like me who are paying for insurance through their superannuation and don't know about it. And having this insurance could actually be a good thing.
I think a lot of people get put off by life insurance because they think it's very complicated. But actually, it's really pretty straightforward because it's all about three things, really. It's about replacing your income if you can't work. It's about looking after your dependents if you're not around to do it. And it's about paying off your debts if you've got a mortgage and those kind of things.
There are three different kinds of insurance that your super fund might sign you up for. The first is income protection insurance. This covers you if you've got a job or a regular income and then you're sick and injured and unable to work for a certain amount of time. The second one they might sign you up for is called Total and Permanent Disablement, TPD. This covers you if you're seriously injured and can't ever return to work. And the third kind of insurance you might be given through your super fund is life insurance. This is just a lump sum that pays out if you die. Obviously, having a safety net for this kind of stuff is a pretty good idea, but the majority of us who are paying for insurance through our super still have it sitting on the default settings. We all have different priorities, so if you're paying for insurance that doesn't suit you or that's overpriced, it could have a really big impact on future you. This is because your super isn't a savings account. You're an investor. That 9.5% coming off your paycheck each week is probably going towards stuff like shares and property and bonds. Historically and on average, your super fund can grow your money by about 7% each year. So let's see what happens when you're paying too much for insurance that isn't right for you. Hey! I'm regular Sally, and like most people, my default insurance kicked in when I turned 25 and I didn't touch it. Hi, I'm Super Nerd Sally, and when I was 25, I decided to personalize my insurance. I don't have kids, so I decided to pay a little less on life insurance. Then when I had triplets at 35, I bumped it back up again. Okay, before we go on, a quick note from Nick Kerwin.
If you cancel your insurance and you want to join at a later date, it's worth knowing that you may well have to give medical evidence to support getting that insurance again. So if your health has deteriorated or you're not in great health, then it's worthwhile hanging on to the insurance you've got.
So keep that in mind. Okay, but to keep it simple, let's say that I save $100 each year on insurance. Over 10 years, that's $1,000, and with 7% growth, that ends up being $1,578. By the time I retire at 75, that extra $1,578 has grown to $23,630. Not bad for a day's work. But how do you actually decide how much insurance you need?
Just think about if I was not able to work, how much money would I need? And then that's the kind of insurance you need to look for. If you do have dependents, then it's a simple question: how much would they need if you weren't around to provide for them?
Everybody's going to have a different answer, and it's probably going to change throughout your life. So I did what future me said, and I logged on to my super account. It was actually really easy just to drag a slider that changed how much cover I had and how much it was costing me. The thing is, some of the insurance you can get through your super fund is pretty affordable, but with other options, it can be up to 12 times more expensive for the same insurance. They also have different terms for things like mental health, pre-existing conditions, high-risk jobs. And that means it's worth checking to see if you're paying for something that's actually going to cover you and whether it's good value. If you do that, you're going to end up with a safety net that actually suits you, and it could save you tens of thousands of dollars in the long run. Which means when future you is sipping margaritas on a cruise ship to Mars, they're going to be thanking you big time.
Just one last thing, darling. Love you. Bye-bye.